Happening, man?
Good morning. Wow, we have a lot of follow through going from what we've been talking about over the past couple of weeks. And I was listening to you in your last segment about the unemployment claims and things like that. And I think that's one of the keys that are driving the bond market right now, that is also influencing the currency market. To kind of go back to what we were talking about, the oil trade is still on the table. Ironically, you saw a little bit of a pullback in the dollar yesterday. Oil was down, bonds were up. Now what happens today? Oil is up $1, bonds are down $1, and the dollar's up. Interesting, isn't it?
Definitely, I know.
I think that we figured out that it doesn't matter if it's the dog or the tail who's wagging what, but they're definitely wagging right now in that kind of little symmetry.
Those relationships, definitely,
right?
Man. You're giving us quite an education each week, and they're staying, I know.
This is going to happen, I think, and it'll really start to influence a lot of volatility, like you were saying, coming up over the next few months. We have the next wave of PPE going on, okay? Now, if you look at PPE at its really face value, it's allowing companies to keep employees on because the government is subsidizing their payroll. So ultimately, that means that really it's welfare where you're getting paid to work. In other words, you're keeping your job. So as long as the government keeps on coming up with new rounds of stimulus, and this is going to be the wave of the future, which if it is, that's not constructive, or it's going to be destructive to our economy.
It's not how economies flourish, right?
Yeah. Right. It's absolutely. If that's what's holding up our market right now, especially our job market, then we're looking at an implosion in our, definitely in this labor market like we had in the 70s coming up, because it's not sustainable, So that's going to be troubling for the currency market. So let's just say that I'm wrong in this, okay? But as soon as this PPE stuff does come to an end, meaning the next wave runs out, if we don't see a jump in unemployment, in employment, which would help to give a lift to the bond market, then I think we're going to be in some serious world of hurt. And the dollar is going to be really, really strong, except for the currencies that are oil related. Okay. Meaning like the British pound. So we've seen a lot of divergence. We figured that out over the past couple months. And now if you look at how gold is on, its lows today, with the interest rates on their lows, again, are close to their lows today, this is helping to prop up the dollar, except for the pound, it's trying to stay strong, so it's just a quiet trade. And whenever the pound doesn't have a lot of volatility and the dollar's in play, that just goes to show you how much strength there is in the pound, and especially with oil up. You know what I'm saying? So I think with the British pound, you have to look at the key level of $1.3906 as a key pivot. Only below there does that market become somewhat neutral to bearish, and anything above that, we're looking for a rally that's going to take out the highs. Especially if we get oil up to, like, let's say $65 a barrel in the next week or two, I can't see how the pound would not be making new highs. At the same token, U.S. dollar Swiss, it was hovering right around the highs today, and this thing is a bull. Now, is it an excessive bull? No, but I think that if you look at the Swiss right now, it's hovering right below 92.08. If it takes that out, it has a good chance of getting up to, say, 93 to 93.5 over the next few weeks, and that shows that a flight to quality currency is failing against the dollar, just at the same time while the yen is failing against the dollar. So that really props up strength for as far as the U.S. dollar. Now, the dollar index is going to be a hard read, so I wouldn't expect to see any explosive move on the index, but in those currencies, I think you're really going to see that manifest, which means a lower trading euro also. I think you're going to see the euro-US dollar flirting with the $1.19 to $1.18.5 level within the next couple weeks, as long as the trend maintains itself right now, because, that's the way it's looking right now.
Yeah, that yen chart, right? I got a chart of the yen up there. We're 107.12 right now. It's been a one-way rocket ship since basically the beginning of January. As you talk about gold struggling with a strong yen, and we're seeing, gold struggle in a big way. I'm always kind of getting ready for your interviews at 10:40 on Wednesdays, and I said, my goodness, look at that yen, man. It just continues. It's not stopping. Little retracements here and there, but the trend, you don't have to be a brilliant technician to see the trend in that yen, man, trading higher in a big way.
And you said the key thing is that ever since the beginning of the year, and that's when oil started to surge. That's when the bonds started to tank. That's when gold started to. Remember how gold was strong coming into the new year, and then ever since that, it started to erode. And if you look at the gold chart and you flip it up right side up or upside down, whichever you want to call it, it looks like the U.S. dollar yen chart. Which And we know that markets don't just always you can't just look at the gold to see where yen is going, but right now that is part of that trade.
Oh.
So and oil especially. Think about this. We were a net exporter of oil. Now we're not going to be it. You know who one of our customers is? Japan. Now you know that.
Okay.
You know why you keep inflation down? The more competitors you have, pricing stays down. Now, since they have less options to go to, what happens when all of a sudden pricing goes up? You see what I'm saying? Like,
yes.
There's less options. So that means now with them, they're more dependent now on the Middle East and other areas around their, around them.
Sure.
So,
and as we know, that's
the yen,
less competition, right?
Right. And it's good for us, though, because we buy Japanese goods. So for the American consumer, I think going forward, like as far as, but I mean, I don't know what exactly, everything that we do purchase from Japan that's still made there that we import, but that is definitely good for us in that regards, So even if we have a slowing economy, we'll be able to buy their goods much more readily, which that helps us, I guess.
No, the number of interrelationships, whether you talk about inflation, you talk about yields, you talk about commodities, and stimulus kind of all on top of it. And I agree. And I think even, whether it's even when PPE runs out, I just think once we reach a point that, and thank goodness it looks like we're going to get there over the next 2 or 3 months, that we have rapid vaccinations in the U.S. and everybody's very comfortable operating in a normal environment of their businesses, normal environment of society. The expectation of some of the non-farm payroll numbers for, let's say, like April, May, and June, if we don't deliver when these businesses should be open back up, when people are comfortable dining out and almost dying to get out of their house, the market is going to be pretty freaked out, even if people are still on that payroll, because they're not going to be on there forever, like you said. And if that key just doesn't turn like it should, like it's probably priced in right now that it can, that's going to be some volatile times, man, when you get the markets basically sitting at all-time highs.
Totally sums it up, Tommy. It totally sums it up right there, where unemployment. Now, I'm a bond guy, and remember how I've been saying for the past couple of weeks, I've never seen a bond move like this without intervention?
Yeah.
Employment will be the deciding factor in the next few months, without a doubt. You nailed it, without a doubt, for sure.
And it should be, right? Employment.
Yes,
that's what it's all about, man. Jobs. Totally.
Right. It is the biggest bond. It is the biggest bond number to look out for everything.
Teddy, thanks so much for the update, man. Wow. We always appreciate it. Forex-trading-unlocked.com, folks. We'll talk to you next week, man.